Welcome to the Manning Up on Real Estate podcast. This is the podcast where we will have real talk on what is happening in the local market of Greater Vancouver. Here we'll discuss the news, strategies, and interviews to help you man up on your real estate career. I'm your host, Cameron Manning. All right, guys, welcome back to the Manning Up on Real Estate podcast. Hope you guys have had a great new year so far. We're into 2019, and I'm really excited for this year because we're ramping things up on the podcast. We're actually going to be bringing you guys a lot more interviews this year. And to start things off right now, I've actually got our first interviewee here, Kelly Fry. So, Kelly, welcome to the podcast.
Thanks, Cam.
So for those of you guys who don't know Kelly Fry, she's one of the top agents here in the Lower Mainland. She runs a large team. In fact, it's the team that I operate on, as well as she is a very sophisticated investor, bringing in lots of money, doing some very large deals. But we're going to kind of go back a little bit before we dive into what you're doing right now, Kelly. And can you tell us maybe a little bit about your background? What kind of led you towards getting into real estate?
All right, Cam. Well, my background is my professional career was as a chartered accountant. I was raised to believe that, you get a good education and that would give me a good standard of living, and education is really important in my family. But once I came out here from Montreal to Vancouver and was working in a large accounting firm, I was just too entrepreneurial for the environment. I was always wishing that I was in the game of business instead of scorekeeping for other people's success, which is effectively what an accountant does, whether it be through auditing or tax. So I had this burning desire to become an entrepreneur, and one of my good friends said, well, pick something, pick anything. And at the time, in our firm, we had a female partner who was pregnant and one senior manager, and there were no business clothes for professional women that were for maternity wear. So I jumped into the maternity business and started a company called Maternal Instinct Wear, built it into 2 stores, a big catalog operation, internet sales in 1995, and ran that for about 10 years. But the clothing industry was becoming increasingly more and more competitive, and it was getting tougher and tougher to even buy product cheaper than what my competitors were selling at. Even though they were selling lower end goods, it was affecting my sales. During the time I was trying to improve the profitability of the business, I started selling RESPs. I became one of the top sales agents in the country to set up the college plans for children. But the writing was pretty well on the wall as production was moving more and more offshore and I was manufacturing locally. So I didn't know what to do because I had about $200,000 of debt. I was fairly young. I could not file bankruptcy because I'm an accountant and we lose our designation if we do that. So one day it dawned on me that if I kept the company alive and I just changed its name, the bank wouldn't call my operating line of credit. And if I could make settlement agreements with my suppliers, I didn't really want to leave anybody high and dry and just sort of close shop. So fortunately, a few years prior, I had bought the book Rich Dad Poor Dad, and I started to get a different mindset and started to realize the importance of real estate investment. And I saw an infomercial on buying real estate with no money down. And despite my highly leveraged situation, I managed to start buying property with the help of my parents co-signing and the joint venture partners. And so in a short period of time, I acquired about 3 properties, all of which went up in value substantially. And I was able to shut down my business in about 2005 and just become a full-time real estate investor. I put all my stock on eBay, liquidated, and started doing deals. So that's what brought me to becoming a real estate investor before I ever became a realtor.
So you were an accountant by trade.
Yes.
And you went entrepreneur. So it's kind of different because a lot of people who go into worlds like accounting, they're not necessarily 100% entrepreneurial because it is somewhat, if you can get in with a good firm, it's more of a job, right? But you decided you didn't want the 9-to-5 accounting for someone else, and you went very entrepreneurial, started your own business right away, and you did some salesman stuff, and now you're into real estate. But as you started building your real estate career, things changed, right? So you started 2005, you sold the business, or you didn't sell the business, but you shut the business down.
That's right.
And then you started really building up up to 2008, 2009. Can you kind of between that time tell us what transpired as you built the portfolio?
Sure. Well, I also had my first child in 2001 and then my second one in 2006. So I was balancing being an entrepreneur, being a mother, trying to figure out how to leverage everything. And I started to get joint venture partners. I started to do RSP lending. I started to do assignments of contract. I tried to recreate the income that I made as an accountant, as an investor at minimum, so that I could also still qualify for mortgages. And I started in 2005 investing in Winnipeg. Um, I had a good friend. We went out there and we put out several hundred offers in one day, and then we started to buy cash flowing properties. Now, I learned a lot of hard lessons in Winnipeg because we had a property manager that was embezzling,
Oh my
but
God.
it was the starting point for building a big portfolio. And then I moved my way from Winnipeg to Calgary, Edmonton, Red Deer, and then locally always in Vancouver as well. I wish though that I had just invested in the local market. So I built my portfolio up from the two or three that I had up to about 48 properties at my peak in 2009. It's no longer a peak, but for a period of time that was the highest I had done. And then of course in 2008, 2009 we had the big financial meltdown, and so it
So
was
things changed for you then.
very rough period at
Mm-hmm.
that point. I didn't know if I was going to get through it actually.
Okay. So in terms of 2008, 2009, for those who don't know, maybe you're a younger listener, we had a massive financial crisis that, stemmed from a lot of the stuff going down in the States with the subprime, but it definitely affected a lot of investors and a lot of homeowners up in Canada. And when you were buying a lot of these properties, the lending rules were very different in the early 2000s, right? You were able to leverage them in some cases, possibly up to 100% financing, depending on how you structured it, right?
Yes, and you could buy rentals with up to 95% financing. I was self-employed, so I could only do 90, but I was doing vendor take-backs on the down payment. So effectively, yes, I was financing 100%.
And so when you have financing that's 100% on a property, and then suddenly we start seeing values dropping, rents are dropping, they're not covering the mortgage, what starts happening there? What kind of situation occurs?
Well, it becomes a domino effect, and you belong to all these real estate clubs that are giving you pins for getting more and more properties. But the reality is when things go sideways, it's a really rapid decline because particularly in Alberta, when oil prices drop and rents plummet, now suddenly you're negative cash flow on multiple properties. And if you have joint venture partners who aren't financially strong, then suddenly you're the one who's making all the cash calls on multiple properties every month, and it can be very, very stressful.
Absolutely. So going through 2008, 2009, you were either trying to liquidate properties you could,
Yes.
just to cover the negative cash flows on ones you couldn't. And that kind of led you, I think, towards that process of saying, I need something else to cover the income that we're losing, because that was your only income for the most part, right?
Yes, that's right. And I remember that I was bleeding about $13,000 a month at that time. And my husband's business was also going down, and he was about to lose everything. So it was a very, very stressful time.
Right.
But at the same time, I was approached to become a mentor for students across the country. And, on the one hand, I felt a bit bad because I was going through what I was going through. But I had the experience to teach other people what to do right and what not to do because I understood the various levels of risk at that point in terms of investing. And so suddenly I had a whole bunch of contracts to teach people across the country. And I managed to, with the help of various partners who either bought me out or came on with different financing onto my deals, I managed to survive and get through it.
Perfect. Now, I think that's the key for a lot of people. Like, if you're going to hire a coach or a mentor, you want someone that is one where you want to be, but they've gone through the tough times, right? Because
That's right.
they can guide you through it. There's too many people, I think, that decide they want to get into, I'm going to be a mentor because I'm successful now, but they've got success in the short term and they haven't gone through
Through a down cycle.
through the down cycle.
Yeah.
Absolutely. So I think that's where your mentorship has gone. And now over the years, you've coached how many students now?
Oh, I think about 105, something like that.
About 105
And
students.
then they're usually in pairs, so it's double that really.
Right. So we're over 200 people now that you've coached.
And I taught for a year creative financing to live classes as well.
And then not only that, I mean, you've done a lot of speaking as well. So you've probably, in a way, mentored thousands of people now across Canada with the stuff you've been providing, whether it's speaking on stage to 500 investors or it's one-on-one mentorships. And it's, again, because you've gained the experience of building a portfolio fast, having to go through a down cycle and reshift everything, and then build it back up from there. Now, another thing that ended up happening for you is you decided, after a couple of times of deciding, but you decided to finally go for your real estate license and become a realtor. Tell us about the decision there and what kind of prompted it.
You know, looking back, the universe was always sending me in that direction. I just wasn't ready to hear it. In 1995, well, I also had a boyfriend in university who was very, very successful in real estate, and I had other friends as well. And then in 1995, I did my license just sort of for the sport of it, but I wasn't quite ready. Sales was a dirty word to me still in that time in my accounting mindset. So I didn't invoke the license, and then in 2004, I passed again. But I was kind of dissuaded by one of my mentors who said, you know, you can't be a realtor and investor at the same time. There's disclosure issues, and it's going to impede you as an investor. And so without really researching it, I just blindly listened. And I wish I had just become a realtor then. But it wasn't until 2011 that I just decided, you know what, I'm going to give this a go. If it doesn't work, I'll just do something else. But I really want to see what it's like to be an investor and a realtor. And I mean, it was just the right path for me all along.
Now, a lot of the investors are taught, you know, you can't be a realtor and an investor because the disclosures that are required and everything, it's too much of a muddy line. What are your thoughts on that now that you've been doing it for quite a while as a realtor?
I find it's quite the opposite. I mean, all we have to do is disclose that we're agents, just be honest. And get so much more exposure as a realtor. I get so many more joint venture opportunities. I'm front line to seeing where the deals are, what the prices are, and it's like insider trading that's permitted. I mean, it's crazy.
There's no other industry that allows insider trading like real estate.
No,
Absolutely.
It's just that I wish that more realtors took advantage of the opportunities in front of them.
Well, for sure. I mean, that's the thing we do have. If we were to educate ourselves as realtors, we could be getting cash flow properties. And at the end of the day, as realtors ourselves, we don't have a pension. We don't have anything to rely on.
That's right.
When we decide to shut down the business, our income stops.
That's
so
right.
More and more realtors need to start investing in their own product that they sell. You know,
Absolutely.
it's kind of like the insurance broker who won't use the insurance that he's recommending, or the financial advisor who won't invest in the stocks that he's investing. You should be investing in your own product if you actually support it, right?
Well, and I think as an investment realtor, investors can tell right away if you're an investor or not, and they don't want to take advice from a realtor who isn't.
For sure. For sure. So you got your license. You've still, at this point, you're still recovering from 2008, 2009.
Yes.
Because it did take a long recovery time for you, right?
It did. But you know, once I got into my second year as a realtor, I knew in my heart that I would never worry again, that I would be financially strong from that point forward, because the business kept coming. And I knew it was not just a one-off, that this was
But the business didn't come right away, though, right? When you got your license, it took a little bit.
Yeah, it took about 6 months for my deals to really flow. But once I got the consistent flow, it's never stopped since then.
Right. So from there, you ended up 6 months, no deals, no income as a realtor.
That's right.
And then at the end of the year, you ended up, if I remember, as realtor, the rookie of the year.
Yes, that's right.
So, you know, suddenly it went from, oh my God, I can't seem to get anything, to boom, an award at the end of the year. And then that snowball has continued. And it's to the point now where you're no longer just an individual agent. You did it about a year by yourself, give or take, and then you started building from there. So take us through that process here.
So, you know, I was younger then, 7 years ago, and it was fine that I was working till 1:30 in the night every night, but at a certain point you need help. And fortunately, because I was rookie of the year, I was asked to be on the Agent Leadership Council at my office. So I was exposed to very top agents who became my friends and who guided me. And there was a covenant with being on the Agent Leadership Committee, I should say, that I had to go to Mega Camp or Family Reunion, which at the time felt like a drag that I had to spend this money and go to the States. But what it really did was it opened my eyes to building a business versus being a salesperson. And I started to understand the potential for what this business could be. I also was reading The Millionaire Real Estate Agent, and I knew that I had to hire an assistant to be able to continue on and to keep leveraging and growing the business.
Right, because most agents by themselves, if they work hard and really dive into it, the maximum capacity someone has is give or take 32 deals, right, by
Yeah,
themselves.
and that's like if you have no life.
Mm-hmm.
And it's really, from a business standpoint, not the smartest thing to do, because as an agent, if you want to make the most money, you've got to focus on getting clients out to see properties, getting them under contract, getting listings signed, and negotiating contracts. Those are the three highest and best uses of our time. So all of the research, whether it be CMAs, whether it be preparing listing docs, whether it be writing offers, everything else should be administrative task for your admin, so that you're freed up time and energy wise to do the things that make the money to then pay the assistant.
Right. So first year, rookie of the year. Second year, you start hiring an assistant. I happen to know that guy, you know. Kelly and I, we go back almost 9 years now, technically, when we first met. But it wasn't until about 5.5 years ago, almost 6 years ago now, when, an ex of mine was looking to buy in BC. And that's when we got reconnected through a mentor of ours. And she helped her buy. I came out to BC afterwards, and I was going to go full-time into real estate and didn't realize how much time that actually opened up when you went from 40 hours a week full-time at a job, and then suddenly you only did like a couple hours a week in real estate, and now you're trying to fill that time. So Kelly ended up calling me up, and she was getting busier, and she says, "Hey, I need help. Do you want to come work for me?" And that kind of was the spur for Kelly's success, I think, growing the team, right, was she got her first hire in there. So I came on as her assistant in 2013, and it's been a roller coaster since then. Kind of take us through where we've grown since then. We've had some massive growth, so take us through that.
Well, for sure. From there, it was just me selling real estate and then having an assistant. And then people started to approach me to start a team, join a team, and I needed help all the time. So I just said yes. And so then Tanya joined us, and I met her at family reunion, and she sort of never left me, started coming into the office. And then Cameron decided to get his license. You decided to get your license, which was great, and I always encouraged you to do that. And so that meant we needed another admin. So Tanya went and found Mark, who is an agent as well, to become our admin. And then we became 4.
Mm-hmm.
And then after that, you were telling me about this young kid who was such a big success in the cadets. And I said, well, we need to hire him.
Yep.
And so we brought Kevin on, and Kevin was a lifesaver in terms of helping us on the administrative side. And then from there, we jumped. That puts us at 5, I think.
Yeah, and we had some people in between. I mean, obviously, when you're building a team, you're mixing a lot, because we're all salespeople and we're all commission. We're all different personalities. So we had a few people in between those hires as well, and that's kind of the thing with growing a team in real estate, where we're all independent contractors, yet we're all trying to work together towards a common goal. Is you're going to have people who will come in and out and not necessarily fit the mold. So in the time while we're growing this team, I mean, we've probably hired and let go half a dozen people or more from the team.
Yeah.
But we've continued that momentum of growth. So today, currently, 2018 was a big leap for the Kelly Fry team, because we're working out of the Maple Ridge office at the time. And as we continue to grow, as we continue to defy logic in the area, we started getting really crammed, right?
Yeah, I mean, and as a real estate investor, with my first business, when I shut it down, the biggest lesson I learned was the only one that won after 10 years of hustle was my landlord. And he was 93 years old, very successful in real estate. And I realized that when I owned my next business, I would buy the real estate. And so I had this burning desire to buy my own commercial space, and it became viable by the time we hit late 2017, that this was something we needed to do, particularly to continue the growth that I wanted to see for the team. And so because of the pressure of my MAPS coach, I just went on Paragon and I found some units right next to our market center that I didn't even know existed.
Right.
And so we pounced on that opportunity, and I wanted to start January 2018 on the right foot. So we literally took possession January 1st. And then we had a bit of an adjustment to the larger overhead and made some changes throughout 2018. But we now have the space that we've needed for so long, and we also want to bring on at least another 5 agents this year, so we have the space to do that.
We've got the capacity now for sure. When we were renting offices in the Keller Williams, I mean, it was only what we could basically just assume and just kind of move into as we went. So now we've got the space. I mean, obviously wasn't without its struggles. You know, we were folding tables and folding chairs for a while, and just making it work.
All around us.
Construction all around us. Dust everywhere. We're walking in suits and, you know, avoiding the walls. But I mean, now we're done. We're fully moved in. We had a grand opening in November. And people walk into this office now and they're in awe by what you've put together here. I mean, even just yesterday, another agent came up for the first time and he's like, I didn't realize what's here, right? Yeah. So I think it's really setting a new trend in the Lower Mainland for what's possible. And I know a lot of big teams are from the States who've already done this, and that's who we've been looking up to. But I think there's not a lot of teams here in the Lower Mainland that have really started putting together an actual business behind real estate. A lot of people just use it as a job or a career, but you being the entrepreneur you are, see this as truly a business. But then again, that hasn't stopped the real estate investing side. You are an investment agent, you teach people, but you still practice what you preach. So in the last 2 or 3 years now, I guess, you've really ramped up your investing again. You started doing, you'd pick up a rent-to-own property here, maybe a good investment property there. But recently with one of your new business partners, well, not new business partner, but kind of a new partnership with a friend of yours, Guy Bouchard, you guys have ramped up your investing. And so tell us a little bit about what you're investing in today.
Sure. Well, I've always done houses, townhouses, and condos and creative strategies, but this is taking it to a new level. I always had a dream of buying an apartment building, and I wasn't sure how I was going to make that possible. But thanks to my partnership with Guy, who's a very different personality than I, and with complementary skills, and his brother-in-law, who's a contractor, we bought our first apartment building, which is a 16-suiter in Chilliwack. I believe it was in the summer of 2016. We then repositioned the building, evicted all the tenants, did a full rehab on a tired building, and raised the value substantially, refinanced, pulled out a significant portion of the capital we put in, and then decided that this was a good model and went on to the next apartment building. Now, prior to that, Guy and Mike had been clients of mine who were doing houses, and then they went up to a fourplex, and this was the next logical step when this opportunity found its way to us.
And then they really started building their relationship as investor contractor through a few flips they did in cities like Mission and things like that we were a part of as the sales team for. So that kind of gained them the skills of working together that they took that same concept into that larger scale, and then of course brought you on as not just a financial partner, but with your financial background, being able to help them with the numbers and managing the books and things like that, watching to make sure these properties are run properly. So you guys did the Chilliwack one, then came Esme Manor out in Maple Ridge, and that one's got a little bit more of a story to it, right?
Yeah, I mean, the next jump was a big jump because we raised capital and we're 7 partners on that one. And our financing was pulled from us through the subject removal period, and we had to take a lot of risks that a normal person would never take. And I sort of felt at every stage of it that as the financial stake kept growing, if things went sideways, that this was my dream, and if I didn't keep pushing further with the deal, then I would always wonder what if I had just stuck it through. And so there was a point there near the end where we were well over $200,000 into this deal, not knowing if we were going to be able to close. And we then had to increase our deposit, which was non-refundable. I think we were up to like $125,000 in the deposit. We had to proceed without knowing with 100% certainty that we actually had a mortgage. And then the private lender that did give us the mortgage in the end really wouldn't give us a mortgage commitment until the day of completion. And so this is unheard of in the industry, and
roller coaster.
Nobody could believe it, but I
remember those days when she was in the office. It was either a good day or a bad day. Yeah. Talk to her or close the door.
So, we ended up going to close, and right at the closing table, half an hour into signing, we got the call that the lender had pulled $250,000 from us off the table. Extremely stressful situation, but thankfully, we had our commercial mortgage broker as a minority partner, and he was able to convince them to pull it off of the construction financing end of it, not the actual mortgage, because we would not be able to have likely assembled the cash that quickly and closed on time, which would have put us in breach. So we managed to close, and that was not the end of the stress, because after we did close, the mayor called us and threatened us, and the media became involved and pursued us as rent evictors, and the tenants came after us. And so, yeah, it was a bit of a rocky road for quite a while, but the building is in great shape now. The value went up substantially. It's a 21 suiter, and, you know, it's really, we're very proud of the way the building is today after all the cleanup that we did, and put in very, very stable tenants.
Excellent. And it hasn't stopped from there.
No, 2018 was a big year because we jumped into buying. My partners do some deals without me, but I choose the ones that I want to be involved with them, and we did 3 together. So 3 apartment buildings. We bought one in Mission, one in Abbotsford, and one in Cloverdale in 2018.
And those ones are all currently going through the remediation process
That's
right
right.
now. But even those ones, because the times have changed so rapidly here in the Lower Mainland, we were in a very hot market, you know, so the government had to step in and try to curb this crazy market. And part of it was targeting landlords. And so some changes were made in the landlord tenancy laws, and that affected how you guys approached these businesses. In fact, you were midway through a few purchases when these changes came to effect, so your game plan had to adjust fast while you're going through it. But it hasn't stopped you guys. You guys are continuing to push forward on these buildings, and it's just inspiring to see what's going on. And I mean, we're not going to go too much detail because we can get very political if we want, and you know, that's a rabbit hole.
That's right.
But
We're salespeople. We don't do that.
yeah, exactly. But at the end of the day, you know, that, you know, investors have to be able to shift and adjust their strategies. You can't be locked to just one set thing, because if you do that, that's a kiss of death, right? Because you can't control a lot of circumstances out there. And I think that's been proven with you guys and the multifamily deals you're doing, adjusting to what needs to happen, new regulations, new ways of, you know, the tenancy laws, how to evict someone, how to do the renovations, things like that. So it's pretty exciting. And if anyone ever wants, you know, Kelly does, you know, she's pretty open about it. You can talk to her partners, go and take a look at the projects and see what they're actually doing, and see if you want to invest in the next project, because they are some pretty fantastic returns that they've been giving to clients and investors. So okay, so quickly, last 2 questions I have for you here.
Sure.
Is we've entered into a different market. 2016 through partway through 18 was a very hot market. It was a lot of us more facilitating offers versus actually being realtors and giving advice. But now the market's totally changed. Both buyers and sellers are scared. Buyers don't want to necessarily take a lot of action, and sellers are still thinking the property values are where it's at, and they're not willing to move as much. But I think there's a lot of opportunity out there. And so I want to say, what's your best piece of advice right now for buyers and sellers in the market to be successful going into 2019?
Well, I mean, if you're a seller, you better be prepared to stage your property, price it aggressively, hire a great realtor, and be prepared for the fact that you may not get the price that you expect, and be reasonable.
Right.
Or if the property can be held as a rental, then by all means keep it and refinance and buy another property.
Don't be afraid to be a landlord.
No, I'm the only realtor that tells people not to sell.
Yeah,
It's not good for my business. But
And then what about buyers out there?
well, you know, there's never been a better time in the last 4 years or 5 years to buy right now. You know, you've got motivated sellers. You've got the opportunity to go in without, you know, with subject to sales. So, you know, the best advice I can give anybody is just buy real estate and don't wait. Buy it today, buy it tomorrow. But having watched what's happened in this market for the last 25 years, coming from a flat market like Montreal, you know, houses went from 40,000 to 2 million, and everyone who's from here somehow doesn't seem to see it. But just buy a second, third, fourth property, and the trend will continue.
It's just a cycle.
You know, the graph just goes up. There may be temporary little glitches here, but really it will always, and you know, real estate's a hedge against inflation. So ultimately, if you want to protect yourself from a devaluing dollar, you want to hold real estate.
So really just get out there and start taking action, get properties.
Just go further out. You know, if you can't make the numbers work, just go out to Chilliwack, go out to Agassiz, go out to Hope, go out to Hemlock.
Yeah, you've become the hemlock queen.
I
That's
have,
another discussion
yes.
altogether.
That's right.
Okay, Kelly. And then the last thing, this is something that I'm going to be doing new on the podcast here, folks, especially doing more of these interviews. But I want to know what's the number one book you'd recommend someone to read to get started with their business, investing, real estate career, whatever it is.
I think one of the books that impacted me the most is probably Think and Grow Rich by Napoleon Hill.
Think and Grow Rich.
Yeah, because it basically distills for you the principles of the rich, and you need to think that way if you want that kind of success.
Wealth is a mindset at the end of the day.
That's right.
All right, guys. So you heard it from Kelly here. If you want to get started, get into the Think and Grow Rich by Napoleon Hill, dive into that book and start learning its principles. And at the end of the day, business and success starts from the mind first. So
Absolutely.
all right, Kelly. Well, we really appreciate you having the time to come and do this, joining us on the podcast. This is our first interviewee for 2019. It's only going to get more and more crazy from here. We're going to bring on some awesome speakers. And Kelly, I couldn't imagine the better person to start us off for this year. Kelly's been one of my number one mentors for the last 5.5 years, been with her, grinding away out there in the trenches, getting the phone calls at 11 o'clock at night, either whether it's to make a deal happen or just to, complain about something. We do that. It is with the nature of the business. But Kelly, I appreciate you being here today. Thank you so much.
Thank you for the opportunity.
And at the end of the day, guys, if you want to connect with Kelly, what's the best way they can connect with you?
604-418-3162.
All right, there you go. She gave you her phone number. Connect with her, guys, if you want to have any questions. You can come out to our monthly meetings if you're in the Lower Mainland here, meet Kelly in person and myself. And that's it from there. If you guys at the end of the day want more content, more tips, tricks, of course, you can go over to youtube.com/Cameron Manning, where we're posting, attempting to do at least one video a week. So again, if you guys want to connect with this podcast a little more, you want to ask questions for future guest speakers, you can go to either Instagram and Twitter and use the hashtag ManningUpRE to connect with me, or you can send me direct messages there. And if you want to leave a voicemail for me that we can answer live on this podcast, you can go over to Anchor, the Anchor app, and give me a call and leave me a voicemail. We'd be happy to answer any calls that you guys have on future podcasts. Thanks so much, you guys, for listening in, and I hope you guys have a fantastic week ahead. Hey now, 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 hey now. What you gonna do with your